For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Today we are looking at a bearish article about Palantir's upcoming earnings report. So let's see what this author says. You can watch my previous video on Palantir's earnings report for a more positive bullish perspective, but now let's get into the video. While discussions about tariffs have dominated financial headlines and captivated traders across Wall Street over recent weeks, there is another trend that has been quietly but powerfully shaping the investment landscape for well over 2 years, and that is the ongoing evolution of artificial intelligence, or AI. This transformational technological wave has steadily captured the attention of institutional and retail investors alike, and it shows no signs of slowing down. At its core, artificial intelligence refers to the ability of software and digital systems to think, learn, and make decisions without human guidance. These systems are not only capable of functioning independently, but they also adapt and improve over time as they are exposed to more data and use cases. This process of continuous learning allows them to handle increasingly complex tasks, ultimately expanding the scope and scale of where and how artificial intelligence can be applied across various industries. According to a comprehensive economic forecast published by analysts from PricewaterhouseCoopers in their report Sizing the Prize, artificial intelligence is expected to contribute over $15 trillion to the global economy by the time this decade comes to a close. This staggering projection highlights just how monumental AI's impact could be on productivity, innovation, and growth on a worldwide scale. As investors look to ride the wave of artificial intelligence, it has become clear that several companies are already reaping the rewards of early adoption and strategic positioning in this emerging space. Among the most noteworthy beneficiaries is NVIDIA, a company known for producing high-performance graphics processing units that serve as the foundation of artificial intelligence-powered data centers. At the end of 2022, NVIDIA held a market capitalization of roughly $360 billion. In less than 2 years, that valuation exploded past the $3 trillion mark, illustrating the profound impact of AI demand on the company's fortunes. NVIDIA's processors essentially act as the computational backbone of AI infrastructure. However, despite NVIDIA's impressive growth and prominence, a compelling argument can be made that another company has now emerged as the new frontrunner in the AI stock space, and that company is Palantir Technologies. Palantir has experienced a meteoric rise that is nothing short of astounding. As of the closing bell on April 25th, the company's stock price had surged by 1,660% since the end of 2022. That kind of performance has propelled Palantir into the ranks of the most valuable technology companies in the public market, now standing as the 9th largest tech firm by market capitalization. Looking ahead to the immediate future, all eyes will be on Palantir when it reports its operating results for the first quarter after the markets close on May 5th. Analysts, portfolio managers, and individual investors will be paying very close attention to this upcoming earnings report, as it could serve as a major inflection point for the stock. While Palantir's ascent has certainly been extraordinary, there are mounting concerns that the company may not meet the sky-high expectations that have now been priced into its shares. But before diving into the specific risks and valuation challenges, it is essential to understand what has fueled the company's rise and how it has carved out such a dominant position in the artificial intelligence and software as a service landscape. One of the primary factors behind Palantir's success is its formidable competitive advantage, or moat. The company operates through two distinct yet complementary platforms, Gotham and Foundry. Gotham is an artificial intelligence-powered software solution designed for use by government agencies, particularly those involved in national security and defense. This platform supports tasks such as data gathering, real-time analysis, and operational planning for military missions. What sets Palantir apart is its unmatched scale and ability to offer comprehensive solutions across both public and private sectors. While other companies may compete in specific niches of artificial intelligence or software analytics, no other provider offers the depth and breadth of service integration that Palantir does, especially not on a global scale. This differentiation results in an unusually high level of predictability in Palantir's business model. For example, the Gotham platform has historically been the driving force behind Palantir's revenue growth. When the company secures contracts with the United States government or allied nations, those agreements often span 4 or 5 years. These multi-year deals provide long-term visibility into revenue and cash flow, something that is incredibly valuable to both management and shareholders. This reliability also enables the company to better allocate resources and plan for future innovation and expansion. Another reason investors have been drawn to Palantir is its consistent profitability and steady revenue expansion. The company reached profitability based on generally widely accepted accounting principles well before many Wall Street analysts had anticipated. This marked a major turning point for investor confidence, as it validated Palantir's underlying business model, particularly Gotham, and raised expectations that Foundry, still a relatively young segment, could become a profit-generating machine in the second half of this decade. Speaking of Foundry, the platform ended 2024 with a remarkable increase in its customer base. It added nearly 200 new commercial clients over the year, which represented a 52% year-over-year jump, bringing the total number of customers to 571. These numbers suggest that Foundry is gaining traction rapidly and is well positioned to attract larger enterprises going forward. As this segment matures, it could potentially become just as important to Palantir's revenue as the Gotham platform has historically been. In addition to strong revenue growth and operational success, Palantir boasts an exceptionally strong balance sheet. As of the most recent reporting period, the company held approximately $5.23 billion in cash equivalents, and marketable securities, and had no outstanding debt. This gives Palantir's leadership considerable flexibility to reinvest in product development, make strategic acquisitions, or return capital to shareholders through buybacks. Few companies can match this combination of financial strength, profitability, and innovation leadership. It is for these reasons that many believe Palantir deserves a premium valuation compared to its peers. However, despite these many strengths, there are legitimate concerns that Palantir's current valuation may have gotten ahead of itself. One of the bigger question marks revolves around the future outlook for the Gotham platform. For instance, in February, the United States Department of Defense recommended cutting its budget by 8% annually over the next 5 years. Such budget reductions could impact Gotham's pipeline of government contracts and thus limit future revenue growth. Beyond political risks, Palantir is also contending with the same macroeconomic challenges that have affected every major technological breakthrough over the past 30 years. History shows that every so-called next big thing eventually experiences a sharp pullback after an initial wave of investor enthusiasm. These early bubbles often burst when expectations exceed real-world adoption rates and revenue generation. Today, many companies are still experimenting with artificial intelligence tools and have yet to see measurable returns on those investments. If this trend holds, AI may follow a similar trajectory to previous tech bubbles, with early leaders like Palantir facing scrutiny as market sentiment shifts. It is worth noting that even though Palantir's long-term contracts and subscription revenues might cushion the blow of a near-term downturn, the stock could still be negatively affected by broader pessimism about artificial intelligence. We have already seen signs of this in Nvidia's recent decline in gross margins, a potential indicator that the artificial intelligence boom may be entering a less exuberant phase, but arguably the most pressing issue facing Palantir is its valuation. During the height of the dot-com bubble in the late 1990s and early 2000s, industry leaders in the internet and infrastructure sectors reached price-to-sales ratios between 30 and 43 before their valuations collapsed. More recently, Nvidia reached a peak price-to-sales ratio of approximately 42 last summer. As of April 25th, Palantir's price-to-sales ratio stood at an eye-popping 96. To date, no major public company has been able to maintain a valuation this elevated over the long term. Whether Palantir delivers strong results on May 5th or not, the company will likely face increasing pressure to justify such a high multiple. Maintaining or expanding that valuation would require not only continued growth, but also a flawless execution of its long-term strategy and exceptional performance across both Gotham and Foundry platforms. Anything short of perfection could lead to a valuation reset. In the end, Palantir Technologies has become one of the most closely watched artificial intelligence-driven companies on Wall Street, with its stock soaring by over 1,600%, driven by strong momentum in its government-focused Gotham platform and its rapidly expanding commercial Foundry segment. The company's long-term government contracts, recurring subscription revenue, and early profitability have given investors confidence, while its debt-free balance sheet and over $5 billion in cash provide it with strategic flexibility. However, concerns are emerging ahead of its upcoming Q1 earnings report on May 5th, particularly around a potential decline in defense spending under the Trump administration and historical patterns of next big thing technology bubbles. Despite Palantir's operational strength, its sky-high price-to-sales ratio of 96, far above previous bubble peaks, raises doubts about whether it can sustain its valuation even with strong results. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.